So, welcome to this presentation. My name is Peter Youssef, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals. In front of your in front of your screens, you have Euro USDs for our chart. It's the daily chart. Now, all charts to be presented are to be of the same time frame, i.e. the daily time frame, unless otherwise stated. Now, with no time to waste, let's start with a small comment about Euro USD, which edged lower yesterday, edged lower on Friday, which was more a result of a strengthening of the US dollar rather than a weakening of the euro side. I have to note here that the USD tended to gain some points as the PCE price indexes refused to slow down. That happened both on a core and a headline level. Now, the resilience of the core headline PCE price indexes tended to highlight the persistence of inflationary pressures within the US economy, and that was an issue. We expect that the release, which was for March, by the way, is expected to harden the Fed's stance in its meeting on Wednesday. So we may see a more hawkish Fed in the upcoming meeting than what the market expects. Now, the big question here is that we have conflicting directions on a technical level. You can see how in the daily chart, the price action on the one hand has a long downward trend line guiding it. Yet, in a more short-term basis, and we're talking about the past 10 days, you can see how there has been an uptrend. So the prices are consolidating within a triangle, and the outlook could provide either way. In my opinion, for the time being, I would maintain a bias for a sideways motion between the R1, the 1.0760, a level which was aimed for on Friday, and the S1, 1.0680, a level that was tested once, twice, three times, aimed for here today. So we tend to maintain a bias for a sideways motion. Should the bears regain control, I wouldn't be surprised to see the price action of Euro USD dropping, breaking the upward trend line, signaling exactly the interruption of the upward movement. I would also require it to drop lower than the 1.0680 and start aiming for the 1.06. That's a level which was tested midst of April. Let's have a look when exactly. On the 16th. So more or less, that's the pre-action for any bearish movement, or the prerequisite if you prefer. On the flip side, should the bulls maintain control and should the upward trend line remain stronger than the downward one, then we may see the price action rising, breaching the downward trend line, breaching also the 1.0760, and then we have the door open practically for the R2 1.0885. You can see how there were clear-cut choppy movements in between the R1 and the R2. The RSI indicator remains slightly below the reading of 50. On the one hand, tends to imply a relative indecisiveness of the market for the pair. On the flip side, maybe also implying that there is still some slight bearish tendencies for the pair left in the market. My opinion, it's a wait-and-see position here. It could go either way. I expect fundamentals today to play some part in the pair's direction. On the one hand, we have mentioned already the USD side and how the market may start repositioning itself, i.e. start buying the dollar in anticipation of a more hawkish Fed. That could drive Euro USD lower. We would be also noting that we have a number of financial releases, high-impact financial releases for the euro side of the pair today and tomorrow. Today, I would be noting the release of Germany's preliminary HICP rate for April. And should the rate slow down, implying an easing of inflationary pressures in the largest economy of the Eurozone, that could weaken the euro side of the pair and allow for Euro USD to drop, breaking, as we have mentioned, the pre-mentioned upward trend line and also breaking the 1.0680. Yet for a bearish outlook to be confirmed, once again, I would require lower trade than the S2. Because we have 1, 2, 3, 4 continuous lower peaks and 1, 2, 3, 4 lower true. So the next true for the bearish outlook to remain unchanged would have to be below the S2. Okay, let's have a look at USDJPY. We had some price action during today's Asian session. Sorry. Let's readjust the labels before making any comments so we get a clearer picture. And in my opinion, I would prefer to have a look at the 1 hour chart to see how the movement, the downward motion of USDJPY progressed over the Asian and early European session today. Let's lock everything in first. 1 hour chart it is. And that's an interesting chart. And let's use the thread line. The day today started practically here. So we saw that the price action of USDJPY was allowed to rise and actually reach as high as the 160.20 resistance line. However, in a very abrupt downward motion at around, that was 7 o'clock our time, that was practically near the end of the Asian session. There was an intense downward motion of USDJPY, which was mostly due to a strengthening of JPY side. Let's drill into the 1 minute chart. Yeah, here it is. That's 705. And you can see how from there on the price action of USDJPY maintained a downward motion. It was allowed to rise once again. Second hit, once again downwards. Was allowed to rise a little bit. Third hit, and that was at around 11:30. So somebody's looking out for this pair. It's understandable that, back to the daily chart, it's understandable that lots and lots of analysts have highlighted the possibility that the Japanese government actually intervened in the markets. The abrupt downward motion, 3 consecutive times of USDJPY could more or less fit into such a scenario. On the other hand, though, we have to note here that any market intervention by the Japanese government could prove to be short-lived. And I'm stating this because practically the fundamentals which have driven JPY to be weaker are still present. And we're talking about BOJ's rather loose monetary policy. It's going to be quite difficult to stop or to reverse, if you prefer, the bearish sentiment of the market for the Japanese yen. And for the time being, I'm not quite convinced about the movement. In a sense, especially if we shift a little bit the upward trend line to the right, that becomes far more evident. So for the time being, I do expect some stabilization of the pair, but I wouldn't be surprised to see the price action rising once again. And in such a case, we may see the price action of USD/JPY actually breaching the 156.60 and start aiming once again at an easier pace for the 158.30. On the other hand, should the bears regain control, I wouldn't be surprised to see the price action moving decisively below the pre-mentioned upward trend line, also breaching the 154.70 support line, and start aiming, if not reach, the 152.70. Once again, though, what we are seeing today is rather abnormal, though. So be on your guards a little bit here. Actually, I wouldn't be trading this pair right now. Anyways, let's have a look at USD CAD. Now USD CAD, this is the 4-hour chart. Let's drill to the daily chart. This is more obvious. USD CAD has been moving in a downward fashion and has done so for a number of days. If we drill into the 1-hour chart, let's drill to the 4-hour chart. This is better. You can see how the pair is having lower peaks and lower troughs supporting a downward trend line. That becomes even more obvious right here. And I'm going to be considering this as a false break. I'm basing this on this peak here. For the time being, it seems to have been easing its downward motion. Why? Because I'm highlighting this as the differentials between the latest two peaks are pretty narrow. So the bearish outlook is still present. Note how the 1.3660 has actually provided resistance. So I'm turning it from support line to resistance line. And let's go hunting for a new ultimate support level. Unlocking the chart, drilling to the daily chart. That's too wide for my taste. Yet I'm getting 1, 2, 3 touches, 4 touches here. There seems to be some mid-level here. So I'm keeping this. And that would be the 1.3415. Give me a sec. There you go. Let's color this in green. Back to adjusting the chart. Starting with the S3, which is now being placed at 1.3415, as we have mentioned. The S2 at 1.3480. Yes, I will confirm that the chart is of Japanese candlesticks. Each candlestick represents a certain period of trading for the instrument. And in this case, it's the daily. So each candlestick practically represents a full day of trading until today. Should you observe a red candlestick, that means that the movement was bearish. If the candlestick is green, that would mean that the price action was bullish. So we tend to maintain a bearish outlook. On the other hand, though, there are some stabilization signs which we cannot ignore. And I'm talking about the RSI indicator, which, okay, it has dropped and is currently running along the reading of 50, implying a rather indecisive market. And that may more or less actually allow for the price action of USD CAD to stabilize somewhat. Should the pair stabilize, I wouldn't be surprised to see it remaining above the R1 1.3660. Yet I would require clear break of the mentioned downward trend line, which would be signaling exactly the interruption of the downward motion and an ending of that downward motion. For the downward motion to be maintained, I would require the price action to start aiming for the S1 1.3570. It's a pretty wide distance between the R1 and the S1, but overall the next candlestick has to be red. Should the bulls take over, once again I would expect the price action to rise, breach the 1.3660 level, which the price action is at right now, breach also the pre-mentioned downward trend line, but I would also require a higher peak than these two here. So the price action has to breach above the R2 1.3725. And that would allow us to start considering a possible V reversal of the price action. Let's have a look at cable, GBP/USD. That's cable's daily chart. Cable, which seems to be hitting a ceiling at the R1 1.2550. At least there seems to be some difficulty in breaking it. It's characteristic that during the Asian session, let's drill into the 1 hour chart. See how the level was reached on the late Asian session today, and the pair corrected lower. Nevertheless, we can see also in the 1 hour chart that there has been 1, 2, 3, 4, 5, 6 lower peaks, with the last one being in the forming, while it has also higher chosen higher peaks. So that would imply a very slight upward movement. Back in the daily chart, that's also pretty obvious. But once again, for a bullish outlook, I would require the pair to breach the R1 1.2550, and it definitely has to breach the downward trend line, which was instigated practically on the 8th of March, before actually switching my bearish outlook. The RSI indicator has risen from the depths of the reading of 30 and has reached and is now running along the reading of 50, which may allow the sideways motion to be maintained, if not actually be used by the bulls as a platform to advance higher. I wouldn't be surprised to see the price action rising even further, maybe tomorrow hitting on the downward trend line and then correcting lower. On the other hand, should the bulls take over, I would require the pair to breach the 1.2550, breach the downward trend line, signaling the end of the downward motion, and start aiming for the R2 1.2710. Let's have a look at the Aussie. This is the 4-hour chart. Let's move to the daily chart. And we can see an intense upward motion which is being maintained. Back to the 4-hour chart. Here you go. Now we can see how there have been higher peaks and higher troughs. 1, 2, 3, 1, 2, 3, 4. So we expect the next peak to be higher. Back to the daily chart. The price action has breached the R1 0.6545. Next target for the bulls would be the 0.6635, which is considerably higher. Let's reposition the labels and correct the intent. R2 to be placed at 0.6725. 0.6635 for the R1. The S1 to be placed at 0.6545. The S2 at 0.6455. $0.6365. Let's lock everything in. For the time being, we tend to maintain a bullish outlook, and we're basing this practically on two factors. The first factor would be the upward trend line, the intense upward trend line. It's a very steep slope upwards here. On the other hand, we have to note here that in the daily chart, the RSI indicator is also rising, which also supports the idea of a bullish outlook, given that the price action of the RSI indicator has breached above the reading of 50 and is rising constantly. For a possible correction lower, despite that being possible, I have to note here that the RSI has still a way off before reaching the reading of 70 and reaching overbought levels. So the potential for further bullish movement is there. Also note how there is still a considerable distance to cover by the price action until it reaches the upper Bollinger Band. Also note though that the price action has breached the 100 and the 200 moving averages. That would be the green line and the orange line. And that was somewhat decisive. Should the bulls maintain control, we set as the next possible target the R1 0.6635, a level which was tested here, actually breached here, tested, breached. So there has been lots and lots of commotion at this level. And that's why we're setting as the next resistance line. Even higher, the R2 is at 0.6725, and in an extreme bullish scenario over the next month, I would be setting the R3 0.6870, which was a peak in the end of the year, 28th of December 2023. That was pretty much the end of the year last year. On the other hand, should the bears take over, I would say that I would require the pair to drop, breach below the 0.6545, breach the pre-mentioned upward trend line, and start actively aiming, if not even breaching the S2 0.6455, allowing us to start drawing a downward trend line. Let's have a look at, you know what, I'm going to be moving out of the FX market. I think we have covered the major pairs here. And I would like to have a look at US stock markets, gold, and WTI. Let's start with WTI's price action. WTI, which seems to be confined in a sideways motion, yet that may be deceptive. And allow me to explain. Let's correct the labels first so we have a clearer view. Now, we have marked continuous higher truths. And 1, 2, 3, 4. On the other hand, you have also downward trend line. And it all seems to be peaking right here. It's going to be a very, very, very interesting movement. Mind you that we're talking here about the 4-hour chart. I would like to have a drill out to the daily chart for a wider view. And you can see how the price action is being condensed. Practically the sideways motion we have witnessed in the 4-hour chart is the condensing within a triangle. And we're talking about a regular triangle, which could go either way. The price action could break it either way. The RSI indicator is running along the reading of 50, implying a rather indecisive market. On the other hand, we have to note that the 3 main moving averages on the chart, which is in the blue line, the 20 moving average, which is also the median of the Bollinger Bands, the blue line here, the green line, which is the 50 moving average, and the orange line, which is the 100 moving average, all are pointing still upwards. So there is some potential for the bulls. On the flip side, I would be noting that the downward trend line is longer and, in my opinion, has been validated a couple of times. So back to the 4 chart. Should the bulls take over, I wouldn't be surprised to see the price action breaching the pre-mentioned downward trend line, breaching also the 84.10 resistance line, and start aiming for the 87.10. Now the 87.10 is a level which was tested once, twice, so that's pretty valid. On the flip side, should the bears take over, we may see the price action dropping, breaching the upward trend line, which would be signaling also the interruption of the upward movement, but it still does not signal a bearish movement. For a bearish movement and a bearish outlook, I would require the pair to breach the S1 82.25, a level which was tested here, and start aiming for the 80.35. That was a level which was aimed for here, but also tested here and here. Okay, let's have a look at XAU-USD. That's gold. We have a clear-cut sideways motion here. This is the 4-hour chart. Even if I drill out to the daily chart, you can see how the sideways motion is present. And I'm noting it because despite the 1, 2, 3 higher truths, we're lacking a higher peak. Because you had 1, 2. The next peak, should that be a bullish outlook, should have to be above the 2,500. Sorry, the 2,430. Right here. There too. Back to the 4-hour chart. Let's readjust a little bit the chart so we get a clearer view. For the time being, we tend to maintain a bias for the sideways motion to continue, and we're basing this practically on the fact that the price action has been confined in the corridor formed between the R1 2360 and the S1 2305. right here. While at the same time, you can see how the price action of the RSI indicator below the 4-hour chart remains practically around or near the reading of 50, implying a rather indecisive market. Now, any breach of the boundaries of the current sideways motion, i.e. either breach of the S1 or breach of the R1, could be signaling a change of trend. And in this case, should the R1 be breached, we set as the next possible target for the bulls the R2 2430, which would be practically a new record high. Any breach above the R2 is a record high. While should the bears take over, I would expect the price action to breach the S1 and start aiming for the S2 2228. Now, there are some which could be discussing the possibility of a lower S1. I wouldn't be neglecting that in the sense that I wouldn't be surprised to see people placing the S1 right here. It was a level which provided support, and that would be around the 2290. Let me correct that. So once again, we're setting the corridor a little bit wider, practically of around $70 wider. $70 wide. Let's have a look also at US stock markets, and I would be noting here Dow Jones. Quite interesting chart. This is the daily chart of Dow Jones. Now, we note that there was an intense downward motion which lasted practically from the 1st of April up until the 19th of April. On the 22nd, the price action moved above the downward trend line, which exactly signaled an interruption of the downward motion. Yet it failed to materially break the S1 38,000. So I would expect that the price action remains in a sideways motion above the S1. One could also add a middle level right here. In my opinion, you can see that being tested here to the upside, here to the downside. I'm more of an all the way guy, and I'm keeping the whole corridor open between the 39,140 and the 38,000. There are some slight bearish indications implying a continuance of the bearish outlook, and that would be the downward motion of the 20 moving average. Yet I would be noting here that the RSI indicator remains close to a reading of 50, implying a rather indecisive market rather than any bearish tendencies of the market. So most probably I would be expecting the sideways motion to be maintained unless we see the price action of Dow Jones starting to near the R1 39,140, maybe even breaching it. And that would allow us to start discussing a possible bullish outlook. On the flip side, should the price action breach the S1 38,000, and this time for a bearish outlook, I would require also a lower show than this one here. So the price action has to breach also the 37,100 before actually adopting a bearish outlook here. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Okay, hi everyone. Welcome to today's webinar. So before we get started, I'm gonna give about 2 more minutes to let more people join our session before we get started. In the meantime, let me know if you can hear me and see me in the chat. And yeah, I'll see you guys in about 2 more minutes. You can see more people coming in. So yeah, we'll start in about 2 more minutes. Thanks everyone. Okay, I forgot to start my recording earlier. Okay, no worries. So it shows strong recent bearish divergence versus the RSI. So that's the main point. But lastly, you can see that we have a combination of the RSI breakout of the ascending trend line. Secondly, we have a bearish divergence. And lastly, we have price itself breaking out of the ascending trend line. So that all gives us a really high probability that price is going to continue to break out of the ascending trend line and move in a downtrend. And you can see that's exactly what happened. Price broke and dropped strongly. Okay. Okay. We have another example here. So you can see we really have a lot of examples to go through today. But basically, in this example, both prices are moving in a descending trend line. RSI is breaking out of the trend line. Okay, and then subsequently, we can see that there is a bullish divergence. Price is making a lower low. RSI is making a higher low. Okay, so that's a bullish divergence. And currently, price is testing the descending resistance line, and we're wondering if it's going to break out of it. So with all 3 points, firstly, it's testing the line. Secondly, we have this RSI breakout of the descending trend line. And lastly, we have a bullish divergence as well. Okay, and that all shows a successful breakout of descending resistance line as forecasted by our RSI. Okay, any questions so far? Okay, all good. Now let's look at some GIFs that show us how a bullish divergence works. So if we take a look at the image first, price is moving in a descending trend line. And we can see, so the first thing is we see price moving in a descending trend line. Second thing is we have a bullish divergence on our stochastic. So price is making a lower low and our stochastic is making a higher low. So that's the second thing. And lastly, we have our resistance level at the swing high, which is in line with our 100% Fibonacci projection. Okay, and then if you look at our GIF, you can see what happened after that was that price subsequently broke out of the descending trend channel, and moved upwards, testing that resistance level very strongly and reacted off of it multiple times. If you're wondering what resistance level I'm talking about the 1.56099 level. Okay, now let's look at another example. Here is more straightforward. We just have price moving in a bullish divergence with price making a lower low and stochastic making a higher low. And subsequently, after that, we also see price moving upwards. And in fact, it actually moved above our Ichimoku cloud as well, which suggests a bullish signal. Okay, do you guys have any other questions? If not, let me just pull up my charts and we can look at a couple of charts together and see if we have any support or hidden support resistance levels or any divergences. Okay, if you guys have any charts you'd like me to go through, let me know in the chat as well. Okay, let's look at by looking at AUD maybe. Okay. Okay, so on our weekly time frame, prices are moving in this descending trend line. Okay, so again, what makes a valid trend line is if there are at least 3 touches, which you can see here, we do have that. And then let's go in with on a daily time frame to go in with our support and resistance levels. So I'm gonna see if I can identify any trends first, but here we see prices kind of ranging. Okay, so firstly, I'm gonna place my pivot over here. Okay, I'm gonna label this as an intermediate resistance. Okay, and then my first resistance, I'm just gonna place it up here. Okay, and then for my first support, I'm gonna place it at this double swing low. Mm, okay, and I try and pull it back as far as I can without cutting too many bodies of candlesticks. Yeah. So for example, over here, I would not place it here because of this area here that cuts a lot of candlesticks. So if you're just cutting the wick like we are doing here, that's perfectly fine. Okay, now let's go in with our Fibonacci levels. So I'm gonna go in with a retracement and I see my 61.8 line up with my first support. Next I'm going in with a projection. Don't think. Okay, 61.8 lines up nicely. And over here, I think we have another extension. Yeah. So for extensions, we use 127 and 161.8, and we are using a Nike tick kind of shape. So if you can identify this kind of pattern, then you can use this 127 and 161.8. Okay. Again, these Fibonacci levels don't have to line up exactly at the level. As long as it's kind of near that level, that's good enough. Okay, so let me just highlight this level here because we have a confluence area, which is basically when two or more Fibonacci levels line up in the same area. There you can see my 61.8 also lines up with that area. And my 50% actually as well. So I'm just going to keep those two. Okay. So here we're definitely going to expect to see some resistance in this area here. Now let's pull out our indicators. I like to start off with Ichimoku and MACD because at one glance you can see exactly what these signals are. So for Ichimoku, price is currently moving in the cloud, so we can't really say much except that the trend is probably changing. So we see price was moving below the cloud before, which is a bearish signal. Now that it's moving within the cloud, we might see prices move in an upward momentum instead, but we can only confirm that once price has moved above the cloud. So I'm going to remove that for now. And our MACD is also giving us a bullish signal. Okay, so that supports our analysis. Let's look at stochastic first. Okay, if we go back to my slides, we typically look at 533 as our settings. So let's use that. Okay. Okay, let's see if we have any divergences. Over here, I can see that we do have a hidden support. So this is the tool that I was talking about earlier. Basically, okay, I'm gonna hide my MACD first. Okay, so basically when price is making a higher high like we see here, okay, just a second. I might change this back to 21. Okay, reason being my time frame is daily time frame. Here. So between these 2 points, right, price has made a lower low, slightly lower low, or rather, price is moving in this first support, okay? Whereas over here on our stochastic, we can see a very sharp difference. Price is definitely making a lower low. Okay, so this could suggest that price is going to continue to drop down here. Okay. So even though the default settings are normally 533, you can adjust it according to the time frame that you're using and according to like what works best for your chart and your trading strategy. Nothing is ever, set in stone. It's really dependent on what charts you're using. So yeah, feel free to adjust it accordingly. Okay. I guess another example we can see if we can find more divergences just from this chart alone. Okay, price is making a lower low here, and here it's making a slightly higher low. You can see immediately after this, if we replay it, okay, you can see price proceeded to move in an uptrend after that. Okay, that's a pretty small example, but yeah. Okay. Any requests for any charts that you guys would like to see, or any examples you want me to go through? Mm, oh, we can take a look at stochastic as well. Okay, so we're looking at stochastic now. Let's look at RSI. Mm, can I add more examples on the chart? You mean do more of these divergence examples? Identify more divergences? For example, over here, we have a hidden support. Okay, whereas on our price, it's making a lower low. Okay, and the tool that we're using is just the horizontal line. So it makes it really easy for you to identify whether it's a support or if it's a divergence. Okay, a very simple one to identify is over here. Okay, so you can see price making a lower low and our RSI making a higher low. Okay, you can see after that, price proceeded to after this divergence, price proceeded to shoot upwards. Okay. Yeah. So yeah, that's on the RSI. Um, okay, another one here. Price making a lower low. Okay, and then RSI making a higher low. Okay. So then you see price also shot up after that. Okay, shall we look at another chart? Okay, let's just focus on looking for divergences, I guess. RSI, stochastic. Let's focus on RSI first. So on our RSI, you can see price moving in this support level. Okay, but then you can highlight the points that you're looking at as well to make things easier. And price is making a higher low, whereas here we have a hidden support. Okay, after that you see price shoot up as well. Another example over here. Price making a higher low, sorry. And here price is making a lower low. Okay, so this is a bearish divergence. Okay, hidden resistance. Now maybe we take a look at that. Over here, you have a hidden resistance level from between this point to this point here, right? We can definitely see that price was making higher highs. Okay, so we also see subsequently price proceeded to drop, reverse off of this resistance level. Okay. Okay, any other questions? Anything you guys want me to go through? Any charts you want me to take a look at? Okay, if not, then that's all I have for you guys today. Thank you guys so much for joining me. I'll stick around if you guys have any other questions. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this helpful, and I'll see you guys again next week. Thanks, everyone. Bye. Have a great rest of your week.